So it says, hey, Menix Money, on a slightly unrelated topic, where do you stand on gold ETFs within your portfolios? So over to you, Tommy.
All right, great question. And yeah, great question. Hard to answer without giving investment advice. And this is absolutely not investment advice. This is just my thoughts on the question. So gold ETFs, or exchange traded funds, that's what ETF stands for those that aren't aware, can be a convenient and low cost way for you to invest in gold. So if we think about gold, there's a few ways that I can think of that you can buy gold. So you could buy physical gold, like gold bars, and the downside of that is that you have to store it, I assume in some kind of safe or vault, and also insure it. Okay, so it's a bit of a hassle. You'd also have to pay tax on that gold as well. Unless you niche tax knowledge, this could be tax trivia, mate, actually. I don't want to take your thunder, but if you buy gold sovereigns from the Royal Mint, they have a face value and they are exempt from CGT and VAT, I believe.
Yeah, absolutely. So because they're more akin to sort of cash, which has no CGT or VAT on, as opposed to assets like gold bullion, for example, where you would have CGT and VAT.
Nice. So gold bars has got CGT, VAT, but sovereigns from the Royal Mint, no CGT and VAT. So tax trivia, love it. So if you don't want to store gold by buying bars or coins, then that's where a gold exchange traded fund comes in. And just to remind you, a fund is something that allows you to invest in gold indirectly. And also, another point is you could hold that gold exchange traded fund inside your tax efficient ISA wrapper, which we do talk about ISAs a bit. And again, for those that aren't aware, just to remind you, a fund is a collection of assets, in this case gold, and you could just purchase a share of that fund. And ETFs in particular trade almost exactly like shares. You can just buy a share of that ETF. So that's how you could buy gold. But neither of us hold any gold, and I want you to understand why we don't hold any gold so that you can make your own decisions about whether you should buy any gold. So why do some people invest in gold? Well, traditionally, gold is thought of as a way to diversify your portfolio and also a defensive asset and a store of value. And I think all or most investment portfolios could benefit from some defensive assets. So I'm going to explain those terms for those that aren't aware. So a quick summary of diversification. Like, what is diversification? In short, it means don't put all your eggs in one basket, okay? If you spread out your investments across a wide range of investments, then if one goes down, the other goes up, overall, you're still winning. And if you're all overall still winning, whatever happens, you're in a good position. So I might use my little example of the ice cream company. So let's imagine you're looking to invest and you want to invest in an ice cream company. Okay, so you've got £3 to invest. You could put that whole £3 into the ice cream company. And then if you have a good summer, then you're going to be doing great. Your £3 is probably going to grow. Okay. But if you don't have a good summer and it's not sunny, people aren't going to want ice creams. So then you've got to think, okay, well, if people don't want ice creams, how could I diversify and decrease my risk a bit? Well, if it's not a good summer, maybe they'd want to buy umbrellas. Okay. So you could put some of your money into ice creams and some into umbrellas. And therefore, if it's a hot summer, ice creams will do well. You're sorted. If it's a rainy summer, umbrellas will do well. Happy days. But then you're like, okay, well, I need to diversify further. What if it's a cold summer? So you could think, okay, I'm going to put £1 into ice cream, £1 into umbrellas, and £1 into warm jumpers. Okay. Therefore, you've diversified, you've spread your risk across ice creams, warm jumpers, and umbrellas. And therefore, whatever happens, pretty much, not guaranteed, obviously, but whatever happens, you're going to be winning, okay? And I think it's important when you are looking to diversify, what you're looking for is assets that are negatively correlated. And what I mean by that is when one goes up, the other goes down. So ice cream and umbrellas could be negatively correlated, because if it's sunny, ice creams are going to go up and umbrellas are going to go down. So does that make sense, mate, as an explanation of diversification?
Yeah, absolutely it does. Yeah.
So I think gold can fulfill that criteria as diversification because it's often thought of as a safe haven gold. So in general, not advice, but when inflation is high and therefore cash is losing its value, kind of like now, or there's global instability, like kind of like now, because there's a terrible conflict going on in Ukraine. In general, gold would do quite well in those situations, and stocks, shares, would not do so well. So you could think gold is negatively correlated with stocks and shares. So you're thinking, hold on, why do these guys not hold any gold? Because I do not hold any gold. I know that you don't either. And the reason is we both have a very long investment horizon. We're relatively young in investment terms. We've probably got another 20 or 30 years of investing ahead of us. And we hold a well-diversified, as I've just explained to you, low cost, but reasonably high risk portfolio. And by high risk, I mean we hold only stocks. We don't hold any bonds. We don't hold any gold. We don't hold any crypto. So it's pretty much pure stocks. And the reason for that is that in general, in investing, higher risk in general means a greater return. Okay, not always, you have to be careful, but in general, okay. And so over the long term, equities or stocks will massively or have massively outperformed gold. Past performance is not an indicator of future performance. Keep the regulators happy there. And also the other thing I don't like about gold and crypto is that it's what's called a non-productive asset. If I own a share in a company, it makes goods or services, and over time that can compound, okay? Gold doesn't really do anything. It's a non-productive asset. And so therefore it doesn't compound over time, and it cannot generate compound interest. And if you've listened to us enough now, you know that compound interest is the eighth wonder of the world. Okay, so hopefully that explains a sort of coherent way why we don't hold any gold, but all of our financial situations are different. And the right investment portfolio for me or Ed might not be the right one for you. And I think one thing that's often overlooked, especially on the internet where everyone just seems to be holding the same portfolio, is the right portfolio for you is the one that you can live with, that you can stick with through thick and thin, and that you are confident in. And when, not if, but when a crash comes, because that's the nature of investing, things go up as well as down. When a crash comes, you don't get scared and sell low and buy high. You just stick with it, okay? So, when inflation is rampant and someone start a war they have started a war in Ukraine, having some gold in your portfolio, if that means that you don't get scared and your portfolio will be less volatile and more stable, and that allows you to sleep at night and not panic. So everyone's situation is different. Do your own research. Gold's not for me. Finally, and I don't think this gets talked about enough, but I think it's pretty relevant to doctors. And again, this is my opinion, not advice, but I think doctors and anyone with an NHS pension should think about investing a bit differently, because the NHS pension gives you a state-backed, guaranteed index-linked income for life in retirement, okay? That is a very defensive asset, okay? The most defensive asset out there, like way better than gold, okay? So given this kind of unique situation, why would we, with an NHS pension, follow the same investment strategy as someone whose entire pension is riding on the stock market, okay? And just to clarify, the NHS pension does not depend on stock market returns. It's a guaranteed index-linked income for life, okay? So if my pension relied on the stock market, which my NHS pension does not, I would invest very, very differently to how I currently invest, because I need to be way more defensive. I might own bonds. I might even own gold, right? Because my entire future is riding on that, and I can't afford to take a high risk. But actually, for us, fortunate position to be in. Part of being a doctor is, it's a part of our overall reward package. We have an NHS pension. And so my investment portfolio is pretty much a side pot. I have the guaranteed index-linked income for life via my NHS pension. And then I've got my investment portfolio on the side, which is actually quite literally, I think, a get out of jail free card, get out of NHS jail early. And my plan is that will allow me to retire earlier than my NHS pension age, which if you're in the 2015 scheme mostly, like we are, then your NHS pension age is linked to state retirement age. So I don't know what you think about that, mate, about whether doctors should invest with a different mindset because we have this ultimately defensive asset. But what I would say is maybe a gold ETF is right for you. Do your own research. Get advice. It's a great question, and I hope it helps. I mean, what do you think? Do you buy gold? Let us know in the comments. Should we invest differently due to our NHS pension? Let us know in the comments. But also, I'm interested in your opinion, mate. What do you think?
Yeah, I think you're right. I think the NHS pension is, as you say, is great. Again, we're not giving advice here. I think we've asked so many of our sort of individual financial advisors that we work with what they think of it, and they all say how great it is and how they can't replicate that in the private markets. So the NHS pension is such a great investment that we've already got. And just going back to the whole gold thing in general, I mean, yeah, as you said, it is seen as a very defensive asset. It's seen as a kind of a go-to whenever the world's in turmoil. You often see the price of gold just go up because it's seen as like a safe haven for investments, for money, for cash. But as you say, it doesn't produce dividends, it doesn't produce interest, and overall in the long term it's seen as it lags the stock markets. So I don't invest in gold for my own personal reasons, that I like the idea that the stock markets are going to give me better returns overall. So that's why I kind of do it, like you were saying earlier. So yeah, as you say, everyone should do their own research. It might be right for you, it might not be right for you. There are some advantages, definitely, but it's all a matter of personal circumstances. But probably not for me, I think.
Yeah. I mean, yeah, exactly. I love talking about investing. I could talk about investing all day long. So if you like more investing chat, just let us know in the comments, because I think investing is really interesting and is a great question. So thank you for it.